All right, so we left off the taxable, or the tax amount from the tax tables, right? So what's going to be next here, do you think? Remember, lines 19 and 28 were decided by that Schedule 8812, the child credit. Okay? Some of those iterations you went through that seemed silly in a different situation might have ended up, putting the credit on line 19. Okay? So we're not using like a Schedule 3 there in line 20. 21 wants us to add 19 and 20. There's nothing there. 22 wants us to subtract 21 from 18. So we should probably put something there, right? So we have something in 18. So line 22, it's going to be the 9163. Okay? And again, this is from example 7. So we already did a lot of this out of order. Okay? Other taxes, like if you were self-employed or whatnot, Schedule 2, we're not going to get that complicated. So now line 24, what's that going to give us? Yeah. Well, this is like your total tax, right? Which is really just straight out of we don't have any other situations to get taxed on, right? So in this case, it's as simple as just the 9163. Okay? So that's the total tax that we would owe for the year. Right? And so what we really need to do now is figure out what? Withheld, right? Was enough withheld or not, right? Or too much, right? So they don't actually have a W-2 in there. But if you look back, think back to example 1 of this whole thing. What were the federal taxes withheld for this couple? Together, add them up. Right? Add them up.
13,000 something.
Didn't they have them listed separately? I thought it was an example 1.
8,000.
Oh, there it is.
8862, yeah?
Yes. And 30 cents. Plus the 30 cents.
Yeah, we just rounded the nearest dollar. That would round to 8862. So that's what was withheld from both their paychecks too. And that's going to be, normally that would come from a Form W-2, but they didn't give it to you in this one. So it was 8862 is what they've already paid in for their tax liability. Okay? Well, we have some up. We're not just going to subtract there, right? Because as we go down, and we didn't have any 1099s with other income in this problem either. Okay? So that's like income, okay, so the stuff, the interest income they got, that would have come on a Form 1099 interest, INT, from the bank. And the dividends, so it's another income, it's a statement of income. All right, and normally if somebody's giving you a 1099 for something, they didn't take any taxes out for withholding. Right, so
Does this couple have a interest?
The interest and dividends, but those, the 1099 int and the 1099 div, we handled with the Schedule B, right? Now, other 1099s would be like the 1099 miscellaneous, okay? So something like that would go in here that didn't get handled on the Schedule B. So, yeah. Not all 1099s are equal. So, they earn too much for the earned income credit. Now, I would say that's something, and we can talk about that in a minute. When you guys first, get out here and hit the world and you're not making a whole lot of money, you'll probably qualify for the earned income credit, for a few years until you get your feet under you, okay? Yeah, right. But not for long. Hopefully, it's nice to get the credit, but then hopefully you don't get the credit after a while because it means you're making more money, right? So we'll cover that a little bit. Talk about it. All right. So no earned income credit, and now we still have this here, right? From our Schedule 8812, the $3,000 for the kid. All right, the kid's worth $3,000. Yeah. And that's it. Not even.
It's a used car.
Yeah, exactly.
Nice.
Well, I'm sure you can negotiate.
You can negotiate the used car.
Right. Let's make sure we don't have to add anything else up here, right? So down here under line 28, we probably have to add some up. See how they put it? Read line 32. Just the way they frame a credit. So this $3,000 child tax credit, they kind of frame it as what? Or a payment you've already made in taxes, right? Almost like there's an extra $3,000 you paid in withholding, right? Yeah. Yeah. That's why even if you have a zero tax liability bill, they, oh, yeah, and we'll send you $3,000.
So instead of reducing your total tax, it increases your federal withheld, right?
Yeah, it reduces the tax liability directly. It's kind of like withholding in a way. It doesn't reduce your income to put you in a lower bracket or anything. It reduces the actual tax liability. That's different. A deduction deducted from your income to make it lower. Credit for taxes paid. That makes sense, okay? So we're going to total up here. Matthew, what am I putting on line 32? Have you seen line 32?
Yes, it's like except A plus 2331.
Yeah. What about line 32 was just of interest to us? We were discussing. Yeah, like we were discussing. Ah, right. Well, what goes there anyway? 3,000. Okay. Hey. It's kind of messy. All right. And now what do we do in line 33?
25 being 26, 32.
All right. We add those up. What do we got? 11,862, yeah? So this is basically the total of tax you've already paid. Money you paid towards your taxes already. Okay? So that's withholding plus any credits they're giving you. All right? And now we'll take a look at line 34 and then line 37. Look at 34 and then look at 37. And which one are we going to use? 34. Why are we going to use 34? Well, specifically because line 33 is more than 24, right? Yep, so we're going to use that one. If it was the other way around, we skip down here to 37. So subtract 24 from 33. What do we got? 26.99. Well, very importantly, read the next line. Huh?
You want for fun? You added the plus 2 up there.
Yeah. Line 35A, read that carefully. Yeah, is that kind of a critical
Yeah.
step here?
Very, very cheeky IRS.
Yeah, well, now, sometimes you can use that refund for like a next year's taxes or a prior year deficit you didn't take care of, right? That kind of thing.
You can flip it over.
Yeah,
Oh.
right, like as a credit for next year. And if you're running a business, that might be an opportune thing to do, right? In certain situations, but you're gonna take it all. So, yeah, we want it all. $26.99, okay? And now all that's left to do is, you're likely gonna want it by direct deposit, rather than waiting for, 8 weeks to get a check from them in the mail, right? So you'd put your bank routing number in here, right? You know what a bank routing number is? Is it the same as an account number? No. Every bank has a unique routing number. And then within that bank, with that routing number, you have a unique account number, so that's how they get the money there, right?
So the routing number is to distinguish which bank it is.
Yeah, exactly. Mm-hmm. okay? And then tell them what type of account this is, just generally, is it probably your checking account, you want it to go in, yeah? Because if you don't fill that out, they'll send you a paper check, it just takes a lot longer, okay? And we get a refund of almost $2,700 here, right? So now the next thing you really don't want to forget to do is sign it, with like a signature. I'll try to do a cursive signature for Brian O'Sullivan, right? And then his wife will have to sign. Haven't done cursive in a long time. Something like that, right? What was his job?
Right, he was a
Cameraman. I don't know why they need you to put that there, but they always have. And it was Margaret. O'Ullivan, something like that. I forgot what she did. Sports TV or something like that.
Isn't she unemployed? She's not unemployed.
Maybe she probably at one point was.
She's got a job.
You're out, right? Like that. What was it? TV,
Sportsman.
not
sports
sports.
announcer or something. Give me a second.
Yeah. Sportscast, okay.
Yes.
Sportscaster. Good enough. And you'd put the date in there, right? Okay? Sometime early next year. I wouldn't use today's date, 'cause you're not gonna be filing today, because you haven't earned all your income yet, right? It's at the end of the year, it's just, right? This would be like January or April
So you fill
15th.
most of it out now.
Well, you wouldn't have the information right now, so like, yeah, you won't get your W-2s from your employer till end of January usually, sometimes February. Right, and all the 1099s and stuff and all that information, all your student loan interest that they send you, that's on a 1098 form, and that can be deducted. Which reminds me, one of the problems I'm gonna change to add some student loan interest deduction, because I think go in there. All right?
So,
So I think that's it, right? Huh? Go ahead.
so you get all that stuff near the beginning of February and January, something like that. But
Yeah.
then you don't think tax are due until
April 15th usually. I mean, they've done like extensions last year because of the COVID. We ended up pushing it till like mid-July or something.
So would you, that doesn't seem like, because there'd still be like a 2-month gap in information.
No, because it's taxes on the year, January 1st
Oh, the
of
year
this
prior,
year
not
to
the
the,
couple.
yeah, it's the year prior.
Oh, okay.
January 1st to the 21 to December 31st of 21.
I see.
And so then in 22, you're paying the 21 taxes. You're
Got
filing.
it. So
being-
it's like
Right.
like getting a paycheck. It goes, you have a pay period from one time to another, and you get the check.
Yeah, kind of, yeah. It's 1/1 to 12/31 of the prior year. Yeah. And you pay that in the next year.
Gotcha.
Let's just go back over this real quick. And rehab. So obviously all this information, and there's one of them in the book, they didn't say we're gonna use head of house. What do you guys think head of household would be used for? Huh?
Like if you had a stay-at-home spouse.
No.
No, it'd still be filing jointly, because there is a spouse.
Oh, right. So like,
With it? Yeah, got divorced or something like that, you got kids still at the house, right?
gotcha.
And there are certain tax advantages to filing head of household if that's your situation. No, it's, well, did I say that one there?
I don't think rare, I think you said like uncommon. Not.
I think
not
it's
as-
uncommon, and I could be wrong, because I'm not a CPA. I think it's uncommon, because I think a lot of people don't know about it. Right? They might not take advantage of it. They might just file single, right? Because I divorced, I gotta file
Right.
single, whatever. But maybe it's not that rare. The married filing separately is pretty rare. So you want to make sure you get that checked up there, names, address, social security numbers in there. Dependents listed here. And then you just start with your W-2, right? different in the book, I guess. One of them has an initial W-2. Right, put that in there, and then if you have tax and dividends, right, you gotta go to your Schedule B, fill that out, and then it'll tell you, okay, enter this here, and then on line 2B of your 1040, right? So as you're looking at these lines and you're getting stuck, just take a look at what it gives you clues, right? Like, enter this amount, parentheses, from Schedule E. Oh, yeah, all right, so I gotta go do a Schedule E, right? It's like you almost have to guess for something. That makes sense? So, how many think they have kind of a halfway decent? Okay.
Oh, yeah.
All right.